Thank you, Stelios, for a great job today, talking about all the major things that we should take into consideration, and your charts are great. And Justin, how are you?
Oh, can you hear me, Dale?
Yeah, we can hear you, Justin. Just want to say hi before I go. I hope you're good, mate.
I'm doing well. Hope you are as well. Enjoy wherever you're headed.
Thank you.
They go to all these different Greek paradises, Justin.
It sounds awful. Just try to make the best of it.
Please remember to say hi to Trent on my behalf.
Will do. Well, thanks for the time and opportunity to speak this morning to everyone, Dale. I just have a relatively brief presentation today that I think is helpful and apropos, given that we are on the precipice of the new ESMA regulations that are going into effect tomorrow, affecting European regulated brokers. So I'll kind of whip through here, but if you see any questions come in or you want to stop me, feel free to interrupt, and I'll happily take a detour with you and make sure that we're covering all the things that everyone listening in wants to learn.
Okay, so it's going to be very interesting to see what impact it has on volume and market structure. So looking forward to seeing what your thoughts are maybe a month into it. So we'll have to have you back again.
No, I appreciate it, and I'm happy to sort of make an educated guess at this point, and then see if I was right or wrong, and I'll own up to if I'm right or wrong.
Okay.
So in any event, today I just wanted to cover something that I think is appropriate, really for all users, all traders, wherever they're located, and they're some of the things that we've noticed as a global introducing broker for the last 5+ years. So very simply titled 6 Mistakes Traders Make in Choosing a Broker. Just a brief risk disclaimer here that probably everyone has seen by now. Quick background on me. I obtained a degree in philosophy from Emory University, what feels like a lifetime ago now. I like to joke that upon graduation, none of the big philosophy companies came to recruit me, so I had to do what any other philosophy major does. I went to law school and actually obtained a JD MBA with a concentration in finance from the University of Miami, and started my career actually as a securities and commercial litigator, working for a large law firm here in Florida, but quickly realized that I was a bit more entrepreneurial than your average attorney, and was really more interested in the business world than I was in the legal world, and left that position to go and work for an FX prop firm that was run by an FX fund manager who at his peak managed about $750 million, and by volume was one of the largest FX traders in the world. And it was a great experience and exposure to trading, as well as to really the business side of trading, everything that goes into brokers and platforms and liquidity. And from there, I left and worked for a boutique broker dealer that specialized in order routing and execution for equity and equity options. And that was more experience into what happens after you click buy or sell, which a lot of people really don't understand or think about, but it is central to a lot of what we do as an introducing broker, trying to help traders find the right brokerage solution for their trading needs. In 2013, we launched Forest Park FX. We were initially regulated by the CFTC and the NFA here in the States. And then in 2017, we actually launched our UK office and became regulated by the F.A.C.E. So quick little bit about what we do. We're different than most introducing brokers, if not all introducing brokers that some of you may have come across. We are very client focused, and our objective is to basically position our clients for success. We try to align our interests with them as much as possible. And the way that we do that, or ways that we do that, are sort of numbered here. First and foremost, we really try to help traders make smarter brokerage decisions, trying to understand their needs, their strategy, the jurisdiction in which they reside, their priorities when it comes to brokers, platforms, and so on. We also try to connect them with the platforms and technology that their trading demands. So there are lots of third-party tools and resources that are available. There are programs that they might need and so on. And what we try to do is leverage our network to help them find and integrate the right technology for their trading. We provide ongoing service and support. So for those of you who have contacted Trent in the chat room, you might have a glimpse into our knowledge, our availability, and responsiveness to any questions that you have about the industry, brokers, and so on. And lastly, but very importantly, we actively work to reduce the cost of trading for our clients through negotiated lower spreads or commissions or our cashback rebate program. So we don't charge anything for our service. We actually make it cheaper for clients to trade at a lower cost through our service. So here we go, common mistakes that we see. The first one, and really always the first one, is choosing an unregulated broker. One of my favorite sayings is return of capital is more important than return on capital. And what I mean by that is regulation is there for your protection. If you choose an unregulated broker in some dark corner of the world, they are 100% expecting you to lose money. And they are the classic term, the bucket shop, that you've probably heard. And you have all the assurances in the world that they will be a terrific broker for you when things are going poorly for your trading. They will provide great service, they will be attentive, available, they will encourage you, they'll provide you resources. But if you start winning as a trader and making money, that's when you're going to see a very different level of service, and you may find that your trade executions start to erode, meaning that you're getting lots of slippage or latency. You may find difficulty in withdrawing funds, not just profits, but your own deposits. So bear in mind, regulation is there for your protection. And first and foremost,
so Justin, they intentionally try to get rid of you by inconveniencing you through costs and everything else, because they're taking the other side of every trade you do, and it's costing them money. They don't want you anymore.
Generally speaking, that's the case. And
Okay.
part of the strategy that we've seen in some of these dealings is that they hope that by making it so difficult for you to communicate with them, that
you'll close.
They'll leave you with very little to no recourse, and you'll just become frustrated with the process and either keep trading and lose the money and then they'll be happy again, or they'll just never return your funds and you're basically stuck without much of a solution.
Yeah, it's hard to fly to the Grenadines and demand your funds, right?
Yes, and typically in those situations you have brokers who are regulated, or not regulated, but registered in one country like St. Vincent's and Grenadines. They bank in another country and they're owned by people who reside in a third country. And there's just not a lot of recourse there. There's no one to go and yell at to try to seek redress for how you've been wronged. And it's important to always work with a regulated broker.
Good one.
Number two is believing everything you read. I like to joke that fake news didn't start with Facebook and U.S. presidential elections. This has been going on for years and years, and as long as FX forums have been around, you have forum moderators with an agenda that promote the brands that market with them and bash the ones that don't. You have reviews that are posted by effectively ghostwriters for one broker trying to besmirch the reputation of another. You have very angry and disgruntled clients who don't really understand that a broker didn't do something wrong, that it's really the client's failure to understand how brokers' pricing and execution works. So you have a lot of noise out there, and it's very hard to really understand what's real and what's not. One example is very simple. We we work with Oanda, which is a globally regulated broker. They're one of the oldest brokers around, 20 years now in the business. And they are the only major broker in the world that has not had any regulatory disciplinary action taken against it. But if you were to go to certain forums and read about them, you would think they are the absolute scum of the earth. When in reality, they've been nothing but consistent for 20 years. And they're a very good, well-run, very straightforward broker. So it is hard for a new trader especially to parse through it and actually find some real sort of objective information to make a brokerage decision. So we just
let me ask you about one that used to
Sure.
have a lot of power and a lot of credibility, and I'd like your opinion if they still do. Forex Peace Army.
Forex Peace Army, you know, we have not encountered anything directly with them over the years that would, I guess, challenge their integrity. There are people who believe that they are
Self-serving?
influencing, self-serving. Yeah, that would be a good term.
Okay.
We haven't encountered it. We've enjoyed a nice relationship with them over the years. We've never done any marketing. They've always treated us fairly.
Okay.
What I think happens a lot with Forex Peace Army is that it's not so much their actions as a moderator that are self-serving, but I feel that a lot of people use Forex Peace Army for their own agenda. And it's very hard as a moderator to know what's a bona fide comment or feedback based upon an experience with a broker and what is someone trying to bash the reputation of another. And I think that's a problem that all of these forums really face.
What's the most popular one out there now that people use as their #1 resource for reviews besides you guys?
I would say, I mean, Forex Peace Army is definitely the one we hear a lot. I think Forex Factory still gets a great deal of traffic.
Okay.
One of the venues that is picking up really a lot of traction is Reddit. There's a lot of subreddits out there that talk about FX and brokers and so on, and because it's not as publicized as much, that tends to be a bit more honest, maybe, in terms of the posters and their integrity. But there's still the usual suspects. People still gravitate ultimately to where there's a lot of information being disseminated, whether it's good information or bad. So you still also see with the finance magnates and leap rates of the world, people still look there for information as well.
Okay, what's the next one?
Next one here is not fully understanding pricing and execution models or regulations. I added that last bit about regulation just because I did want to touch on the new ESMA stuff today. But basically, if you were to talk to any professional athlete or any professional in any other walk of life, a surgeon or a lawyer or whoever, they're not just going to know the law, they're not just going to know medicine, they're also going to understand the tools of their trade. And they're going to be familiar with how you use this particular instrument or that legal precedent or this piece of technology and so on, because that is part and parcel to their success in their profession. And the same is really true for a trader. It's not just about understanding technical analysis and fundamental analysis, but you also have to understand how your broker works. How are they showing you pricing? Are they a market maker? Are they a dealing desk? Are they a straight through processing ECN firm? These things are important. And at the very base level, you want to understand the differences between an all-in spread versus a raw spread plus commission model and how that impacts your particular trading strategy. You want to know if your broker is operating a dealing desk or a non-dealing desk and how does that impact you. You also want to understand regulations or changes in regulations and how that may affect your strategy or relationship with your broker. So as I mentioned at the very outset, we are on the precipice of the new ESMA regulations which are coming in, which affect traders in a variety of different ways, but most importantly, they're a significant reduction in your leverage. And for traders who have enjoyed trading on 200 to 1 or 400 to 1 or 500 to 1 are now going to be faced with trading on leverage of 30 to 1 at max. And so you have to understand how these regulations are going to affect your open positions, how they're going to affect your new positions, your ability to continue to execute on the strategy you've been using. And so it is really important to not just focus on the charts and direction, but also to understand the tools of the trade. And this is a very important thing, especially right now, given how many traders globally are affected by the new ESMA regulations in Europe. And really the thing to take in on all of this is that life is long. Don't rush in. When you're a trader, you're out there trading with real money, your hard-earned dollars. And so take the time to understand the tools of the trade. Figure out, or try to figure out as best you can, what brokerage solution is going to be right for your particular trading strategy, because life feels really long when you make stupid mistakes and waste your money. And so we urge people to be a little bit more patient and do a little bit more research before getting started.
Okay.
Number 4 is using a platform for the wrong reasons. I'm sure you guys have all heard it at one point or another from some trader or contact that you've come into a relationship with. They will say, you must use this broker, you must use this platform, and they'll give you a host of reasons. In my opinion, you don't have to do anything. When it comes to a trading platform, they're all representations of data. 99.9% of all platforms, in my opinion, are the same. They offer virtually the same functionality. They offer the same representation of data. They offer you the same ability to manipulate charts and do the technical analysis that you want. What I think is really important when it comes to a trading platform is to not put form over substance. And what I mean by that is a trading platform should be something that is intuitive to you as a trader. And I make the analogy between using a PC or a Mac computer. My wife is a Mac user and has been for, I can't tell you how many years, and I'm a PC guy. And I cannot, for the life of me, figure out how to navigate her laptop when I need to use something and I don't have my computer available. It just isn't intuitive for me. And the same really applies when it comes to a trading platform. What you want above all, in my opinion, is comfort. You want to be able to swiftly and easily navigate your platform to represent the data in a fashion that most suits your eye. You want to know how to quickly navigate the platform to enter an order, modify an order, close a position, because if you don't have that level of comfort and familiarity with your platform, there will come a time when the market goes crazy, when there's some event that really starts to move things and you are fumbling, hitting the wrong keys, pressing the wrong buttons, and will, at some point in your trading career, make a mistake. You will open a position in the wrong direction. You will fail to modify your order. You won't get that stop loss in time, and all of a sudden it's cost you money. So very important.
That's a great point that you bring up, because we're all human and we all make errors. And I hearken back to my days as an out-trade clerk on the floor of the Merc, and there was a saying, never trade an error. Okay, so if it's an error, you get out right away. Some people say, well, you know, maybe I'll keep it. That wasn't the plan. Do you have the same philosophy? Never trade an error, get out right away.
Yep, I agree with both of those, and that last point that you made, Dale, is that's a whole nother presentation when it comes to traders, but
yeah.
It's something that we see all the time where traders get married to their losers. They can't get out of a trade. I'm a big believer in the concept of thesis trading, which is you got into a trade because you had a certain thesis that you thought the market was going to do.
Not because you duped volume and you have twice as many on, or you didn't intend to be short. I mean, any kind of error has nothing to do with, because you didn't have it wasn't a trade. It was a a fat finger.
You're right. It's a mistake. Cut your loss and move on. But we see a lot lot of lack of discipline in that regard, especially when it comes to retail traders.
I know, I've played errors. So, I mean, you learn the hard way, usually.
Yep.
You know, I
Yes.
wanted to, I wanted to ask you, are there traders that come to you and they say, Justin, you know, I like this broker for this reason, and I've been with them for a long time, but they may have a reason for having more than one account at different brokers. What are the reasons for people to want to have more than one account?
Generally, it's peace of mind. You know, look, we've seen Swiss National Bank incidents, and we've seen some, you know, bad actors in the space. And a lot of traders just like the peace of mind of having broker diversification. They like spreading their money around so that they, you know, if something bad were to happen, it sort of diversifies their risk. At the same time, we see a lot of algorithmic traders will test their strategies at a variety of different brokers to see where it might be performing better.
Okay.
In other cases, we see it where traders may want to avoid, like here in the States, they may want to avoid FIFO and hedging restrictions. So they open accounts with two brokers, maybe one where they can go long and another where they can go short in the same pair.
Okay, good reason. Okay.
There's lots of reasons. Some make sense, some don't to me. Sometimes traders have different strategies. You know, if you're working on a strategy that's maybe very large size and swing trading in nature, then you might want to be with a certain type of firm. And if you have another strategy, which is a scalping one, you may want to focus on a broker that provides much tighter pricing and still very fast execution because you're more price sensitive in that strategy. So there's a variety of reasons, and
Do many do it?
Many do it, yes. I would say we've got thousands and thousands of clients. I would say probably 30% have accounts at more than one broker.
Okay, so therefore, you know, if that many people are doing it, it could be a good idea for people to consider hearing our voices today. Okay, what's number 5, buddy?
Number 5, putting a good strategy to work in a bad environment. This kind of comes right on the heels of what I just mentioned a moment ago, Dale. But sort of the adage, don't stick a round peg in a square hole. Every strategy, you know, or not, I shouldn't say every strategy, but strategies are different from one another. If you have a longer term swing strategy as opposed to a short-term scalping strategy, not every broker is going to be right for that that trading strategy. You know, so if you were to look at, say, Oanda, go back to them, they're great at a lot of things. Very, very tight cost of trading, not one of them. So for someone who is more price sensitive, you're going to want to focus on brokers that can provide tighter pricing if it's available to you. Conversely, if you have a strategy that let's say is longer term in nature and you're not really looking for tight pricing because you're not really price sensitive, but what you do want is price consistency. You don't want to work with a broker where spreads widen considerably around news events or low liquidity or rollover, because you don't want your trade to get knocked out over a momentary widening of spread. You just want to let it mature over time and ultimately gravitate towards your take profit or your stop loss. So there's different reasons to work with one broker over another. And really, you have to understand your strategy to make the right marriage. And you know, as part of what we do is we try to take a consultative approach with our clients, understand their strategy, their trading needs, what's working for their strategy, what's not, where their vulnerabilities are, and take into account all of those factors and try to find the right broker or brokers that we think will best suit that strategy long term.
Okay, and wrap it up.
The last one is basically a bit of a self-serving one, but it does have value and merit nonetheless, and that is not using a value-adding introducing broker. When you deal with brokers directly, they have biases. They want to earn your business. They're not likely to speak fairly and objectively about their competitors because they want to earn your business, and that particular salesman wants to earn your business because that's likely how he's going to be judged as a salesperson or maybe even compensated. So what's important is to try to seek objective analysis. And one of the ways that you can do that is to work with a firm like Forest Park and avail yourself of our experience, our strong brokerage relationships, and the value we add in trying to help you find the right broker for your trading needs and reducing your costs of trading in the process. So just quickly how we can help, and then Dale, I'm happy to turn over to any questions that you or the audience has. But again, we provide broker agnostic recommendations. We're not going to stick a round peg in a square hole. We're going to try to find the right fit for you as a trader. We're going to reduce your cost of trading with cashback rebates or lower spreads and commissions. And we're going to provide ongoing broker, platform, legal, regulatory, and industry support and service. So basically any question that you have outside of should I buy or should I sell, we can answer. We'll leave the trading and analysis to you guys, and we'll come up with, we'll be the resource and support network for your traders with all of their other questions.
Okay, I have
Sure.
have three. Oh, are you?
Sure.
I thought you might have been through. Go ahead.
I just have, I think, just one or two more slides, maybe another
Okay.
minute. I
Okay.
just wanted to sort of illustrate what are cashback rebates, so people who are not familiar with that can just have an understanding. So Forest Park FX is a globally regulated introducing broker, and we work with really some of the top brokers in the world, and I'll show you that list shortly. But what makes us different is that we're not a mere pass-through IB that just sort of hosts a website, and we certainly don't increase your cost of trading in any way. We are a pure value-add resource to you in terms of choosing a broker, but in a more tangible sense, we actively reduce your cost of trading, and this infographic on the right kind of walks you through that. It may be a little tough for those to read because the font is a little bit small, but basically what it does is it walks you through a typical Forex account on the left, and in this example we use opening account with Forex.com, where there's an assumption that you trade the pound on a spread of 2 pips, you trade 2 lots a day, and at the end of the month you have all your P&L from that month and that trading. On the right is the process of working through our rebate program, which is instead of just going to Forex.com directly, you first come through our website, you register, and then you ultimately choose from our list of brokers to open a Forex.com account where you're redirected to their application page. You open your account, you fund it, you trade on the exact same spreads as you would if you opened your account directly with Forex.com. You trade exactly the same volume and get the same executions. And at the end of the month, you have your P&L from trading, but you also have the cashback rebates from us. And in this example on the infographic, if you traded 2 lots a month, I'm sorry, two lots per day on average, at the end of the month, you would have an additional $84 in your account just based upon your trading volume. And there's no catch, no strings, no minimums that go along with it. It's literally free money that everyone should take advantage of. And just 2 more slides here for you, Dale. These are just the brokers we work with. In the US, we work with Oanda and Forex.com. For those that are interested, sometime hopefully late this year, IG will be re-entering the US space, and we're already in talks with them, and will be probably their first papered introducing broker.
Okay, I heard they're coming back, but mainly with binaries. Are they coming back the other way too?
Nope, they have binaries. They own Nadex here in the US, but they actually are in the application phase right now with the CFTC and the NFA to launch a retail FX brokerage that will compete with Oanda and Forex.com, and we're happy to have them, and we'll make them available to our clients.
Okay.
And then outside the US, we work with really some of the biggest brokers that exist, and a lot of names that you'll probably recognize. Somehow in looking at this, we're missing one of our brokers, which is IC Markets, but we also work with them. But you'll see a lot of big names here, and we do a lot of due diligence on our brokers to make sure that they provide a fair and equitable trading environment for our clients. In fact, with the brokers on this page, I think I've actually visited the offices of all but 2 of them. So we do a lot of travel, a lot of due diligence, and these are some really good places to trade. Not the only good places, but certainly ones where we've been able to ensure that our clients have a very positive trading experience.
Okay, and none of these take U.S.
I'm sorry?
None of those take U.S. clients.
No, we don't work with any broker that is not regulated by the CFTC and the NFA that accepts U.S. Clients is doing so basically in contravention of law, and we avoid them like the plague.
Okay.
And we encourage traders, U.S. and non-U.S., honestly, to do the same, because it's a very short-sighted business model. And a lot of times those brokers literally just disappear one day, again, leaving you with very little recourse if you have funds with them.
Okay. I have some questions.
Sure.
For you. Do we trade against a broker or against a common market? Mohammed wants to know.
That will depend on the
broker
that you choose. Some brokers are dealing desks or market makers. Others are non-dealing desk brokers that are facilitating your orders and passing them through to liquidity providers that they're aggregating for you. So it really just depends on the broker you choose.
Okay.
Dealing desk broker, just for clarity, is not necessarily a bad trading venue. Sometimes it's the right trading venue for a particular style of trading. You just have to know that you're dealing with a dealing desk or a market maker that's actually running a legitimate book and not actively trading against its clients.
How can U.S. residents get ForexAnalytix rebates? Is there any offshore brokers U.S. residents can use to trade CFDs? I think we answered that.
Yep, on the first question, regulations don't allow things like reimbursement programs, but for clients that reside in the U.S., they are welcome to open or move their account underneath our group with either Forex.com or Oanda and participate in our rebate program, which should help to subsidize the ForexAnalytix subscription. With regard to the second question, we kind of just covered that. I would really caution any U.S. person from opening an account with a broker that offers CFDs, because again, they're doing so in direct contravention of regulation and law.
Yeah. Do you guys help with brokers here in the UK?
Yes, absolutely.
Okay, Manny, give Justin a call. Right there is its number and email. They'll be able to help you. Can FX be traded through a retirement account?
Yes, it can. We have a lot of experience in that. In fact, we just authored like 5 articles earlier in the year talking about what that process entails. It's actually quite straightforward if you know how to do it. And we do, and I'd be happy to assist anyone that is interested in trading through a retirement account. And that applies to traditional IRA, Roth IRA, SEP IRA. You could even trade through like a 529 plan that you've set up for your kid's college fund. There's lots of different ways to use those sort of tax-advantaged accounts for self-directed trading, and we can definitely assist with that.
Okay, great. And Bill Morrison's follow-up question must have been on rebates. What if you already have an Oanda account?
If you already have an Oanda account, in some instances we can get your existing account underneath our group. I would encourage Bill to just shoot me a quick email or give me a call once we conclude here, and I can explore the possibility of working with him to reduce his cost of trading there.
Great having you with us today, Justin.
Thanks as always, Dale. Pleasure, and thanks again for the opportunity.
Yeah, always great to hear a calm person and having the demeanor, and also I could tell your heart is really into being for the people. So appreciate you being here with us today. Proud to have you as our sponsor here at ForexAnalytix, Justin. Thank you very much.
Thanks again, Dale. Take care.
All right. Okay, everybody, that's Turnaround Tuesday. The pound short did work. I came out a little bit early at 50, but from 64, you had 34 pips, maybe a little bit more. We're getting this rally prior to Apple. Let's see what happens after the close, and good hunting the rest of the day. Looking forward to having Blake Morrow back with us tomorrow. And remember, most of all, don't just count your pips, count your blessings. See everyone tomorrow. Adios.